Alright, good afternoon traders. This is your free video from seasonalswingtrader.com. This afternoon we're going to take a look at DIG, which is the ProShares Ultra Oil and Gas ETF, and we've got a seasonal trade lining up here that meets all of our necessary criteria to consider a long entry. We're trading right now at $37.50. Over the last 10 years of trading history, we have an average gain of approximately 7 cents. We have an average approximate gain of 7%, or 6.93 to be exact. And this trade historically lasts for about 4 weeks or into the third or fourth week of the month. So crude oil has been strong, so we're getting a little bit of a boost here in DIG. Luckily, this is a market we do not have to worry about any earnings because it is an ETF. And you can see here that we are banging up here against this trend line. It's been pretty severe trend line. It looks like we're starting to turn higher. You can see the 9 and 15 has been below, the 9 has been below the 15 all the way back since April, and you can see we're just now starting to cross, as well as the price action on a daily close. There's lots of stickiness back here, which is now support. So you can see we are hitting the 382 here at 36.50. Got a lot of action here. We had a bunch of narrow sideways channel action for several weeks here in this range. Now we are looking to try and break out and up above the trend line here. If we look over at a weekly chart, you can see that the fib extension carries over from the daily into the weekly chart. You can see we're starting to crack this trend line here, which should give us some ultimate targets up here at around the 44.25 to 45.30 area. Going back in time, you can see that that is a popular price point here on DIG. Now I'm looking at today's option chain. I'm looking at the $37 and $36 strikes. Currently the 37s are going for around 80 cents. There's a bit of a large bid and ask spread on the option chain here. But if we look to sell the 37 puts here, I'm thinking the 37 cash secured puts at around 80 cents. That puts our cost basis on the stock down to $36.20 if we did elect to take the position, meaning that the stock, that DIG rolled back over and we got a signed long stock. Our cost basis would be $36.20. I like being back below the 382, also down here in this support area. I think it gives us plenty of room to try to step into the long side. More conservative traders may wish for a clean break above the trend line. Also, as a second line in the sand, a break above this overhead resistance here up at the 38.75 to 39 level. But that is what we are looking at today. Take care. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.